Welcome back, everybody, to the third episode of the Markets Unscripted podcast. Matt Caruso here again as your co-host with my friend Jason Shapiro, who's my other co-host. Jason, welcome. And one of my goals today is to get you to smile and laugh a little bit during the podcast.
I'm a pretty cranky guy.
We're gonna do. We'll see. We'll go week by week. We'll see what kind of progress we can make, but we'll get to the right place. It's a good start. A lot of stuff we want to talk about today. Interesting market's been tremendously jumpy after what looked like a market breaking down a couple of weeks ago. Last week we spoke about capitulation, which was pretty well timed from the way things kind of rebounded from there. And today we're getting a lot of interesting dynamics with Bitcoin being so tremendously weak versus basically everything else. So kind of goes back to the discussion. Is it really an AI bubble? Is it more contained? Is it a credit type of situation? But really what we spoke about this weekend was maybe it was more of an open AI bubble instead of an AI bubble. What do you thought? If you look at all the stocks linked to OpenAI, such as Oracle, SoftBank, CoreWeave, that's really where the pain has been. So we want to make sure we don't misplace the the weakness. What are your thoughts, Jason?
Yeah, I mean, a lot of these stocks, I was thinking today, like, what is a crash? I don't know if there's a defined thing for what a crash is, but you got a lot of things that are down, 40, 50, 60%, right? I mean, in 87, the stock market went down, 23% or something like that. That was a crash. So things have certainly, a lot of things have certainly debubbled. That's for sure, because they're down a lot, So what can you say? A lot of these things have come off a lot. And I think it's important to keep in mind, I always try to point this out in my newsletter and stuff. 6 months ago, we were told that Google was dead because search was dead, right? Because they were falling behind in the AI race, and search was dead and Google was dead, right? That was and look where we are now. So I think it's just important to keep in mind what I'm going to call a load of bullshit gets released by Wall Street. They don't know any better than anybody else knows. And they are apt to be wrong, and wrong big a lot of times. And this was the perfect example, right? I mean, these analysts are supposed to be following this stuff. They don't know crap. They sit up in their office down, in Midtown or in Wall Street area, wherever the hell their offices are. And they talk on the phone and they try to figure out what's going on. And they don't have a single freaking clue. They don't work at OpenAI. They don't work at Google. They don't work, They just all talk to each other and make a bunch of shit up so that they can get their report out on time so that they can get paid. And if you think it's any different than that, then you haven't been around Wall Street very much. And that's why I like to point out when these things happen, which is quite frankly all the time, just to prove the point. If you're going to listen to these people over time, you're making a mistake. And this is the perfect example, right? 6 months ago, Google was dead, according to these people, right? And meanwhile, now Google's on all-time highs. Mm-hmm. And a lot of these other stocks that were going to be the heroes are down 40, 50, 60% in that time period. So my only point being, don't listen to these people, because they're just as clueless, if not more clueless than anybody else.
Well, also, it's amazing how I find these narratives, they take hold. And this is why I used to be so active on X, or, formerly Twitter. But with time, it kind of gets a little bit frustrating because these narratives take hold that everyone repeats, like AI bubble, AI bubble. And okay, some stocks did come off. I can point to a lot of others besides Google, such as, COHR, LITE, that are still at their highs, Google being another one. And they kind of sow these seeds of panic or whatever it is, just based off of a narrative. And then the drop happens, things kind of head back up, and they just kind of pretend like they had the right moves all along. And like, oh yeah, well, Google's a great company. And I remember hearing the chorus of Amazon back in 2011, like, this will never be a profitable company. They can never scale. It's too much of a low margin business. So I agree. I think we're seeing the exact same thing all over again. And like I mentioned in prior podcasts, the main theme of every cycle is just where you want to focus. But the key is to not get locked in to these narratives of specific companies. One thing I've always done myself to kind of help guide, and I don't know with your experience in the futures market, let's say you're trading, looking at different contracts that are related. Let's say heating oil, crude oil, within the energy spectrum. But for me, whenever I see a play or a thematic play, the relative strength of the stocks between each other always tells the story. Whoever knows that market best, which is probably not the guy who's just on TV, it's just, who are the deep knowledge people of that market, they're automatically going to be buying the better quality setups and selling the weaker ones. So, I mean, whoever knew about Google or Gemini 3 and all this kind of stuff, they were putting, when the market fell hard throughout, the beginning of November, and this didn't budge, that was them scooping up every share they could get because they knew they were getting the inside track versus OpenAI. So interesting to see in real time how it plays out.
As you just said, you don't need to have the inside track. All you got to do is let the tape tell you. The tape was telling you very clearly, right, that this thing wasn't going down. As the market was going down, as a lot of these AI stocks were losing a lot, this thing couldn't budge. And there it is. The market tells you everything you need to know. This whole thing of doing the deep dive into all this stuff, it does not give you an edge. Learning how to read the tape really is what is going to give you much more of an edge over time than anything else. And there's the perfect example.
This simple chart, I mean, when I started, technical analysis, you try to get to every indicator and all the rest. I've just so much in terms of trying to refine my process over time is focusing on relative strength. Because what I always focus on, when the market is coming down, in the bottom panel here, the blue line is that the QQQ. Up here we have Google. I mean, even before the market hit bottom, this thing took off and headed the other way. But during the initial stages of the drop, like Google would not budge. And there's others as well, like within that space, like LITE would not budge. I mean, market topped October 29th. This thing was still rallying until 10th of November, came down 2 days. And before the market ever bottomed, this was up and away back at new all-time highs. So whereas if you take a look, if we scroll back over at Oracle, which everyone's screaming bubble, bubble, bubble. I mean, they couldn't rally with the market. I mean, the market was kind of pushing to new highs into October. And the second the market topped, this broke lower, like totally opposite characteristic. To me, that is, when people say the tape, to me, that's the tape. That even when I was market making, it was just on a shorter term time frame where I was studying this exact same dynamic. Is that something you pay attention to a lot,
That's
Jason?
everything. I mean, you just gave the exact examples, and look at how they worked. Like that's everything. Does it work every single time on every single? No. But over time, is that what's going to work? Yes, that's what's going to work over time. We don't really even have to talk about anything else because that right there is everything. That's everything.
Yeah. Well, there's so much now with all of these algorithmic tradings and baskets and ETFs. If the Qs, I think what people don't realize sometimes why this would even work or how it would function, from my point of view, is, if the Qs are falling, that sets off a cascading where they're going to be selling every stock relative to what the weighting is in the triple Qs or whatever their index is. If that stock is not falling when the NASDAQ goes down 7 or 8%, and it's a high beta stock, should be down 14, 15, 20%. If you're not dropping in that environment, someone absorbed all of that passive, like default selling. Like that's selling that's done just because the market's coming down as a whole, has nothing to do with the company. So if the company doesn't want to fall in that environment, that it's right there. Never mind what the person thinks. That's what they've done. They scooped up every share they can get from the passive selling. And the second the selling weight is off, typically, and they're not always, because sometimes you go into a deeper correction and buyers fade. But if the market turns higher, that's going to be your leader 9 times out of 10.
I couldn't agree with you more.
Well, so taking a look at some of these stocks, just to kind of like look at, well, so who's doing better now? Where is there some strength? Obviously, Google is kind of one of the standouts. But if you take a look at some others, like it's interesting. It's a lot of that I've been noticing, a lot of the AI type of stocks that are not the household names, that are in a lot of the components part of the business, which it makes sense if you're like these big data centers and the first thing you're focusing on is on chips, and then bit by bit, you're going to optimize throughout the rest of the supply chain. So if you take a look at VIAV, very, very strong. If you take a look at COHR, very strong, sitting near high. Same with LITE.
Look at how
so
every one of those stocks did exactly what you were talking about. As the NASDAQ was going down, these things were not going down. Every one of these charts that you're putting on here. Anyway, go ahead.
Yeah, so these are, instead of just crying AI bubble, like just try and take a step back. Look at the data. Like who is actually withstanding if you can withstand market weakness, you are not a bubble. To the original point you brought up, what's a bubble anyways? I mean, like people throw out the terms, you need a definition. For me, a definition is a bubble is when the thing finally pops, you are never going back to those highs again for maybe a generation. It's like when the gold bubble popped in the 80s, you didn't see those gold highs for 20, 30 years. It took a whole new crowd. Or same with .com. Cisco popped. You didn't see those highs for many years and all those .com type of stocks, 15, 20 years. So again, before people throw on the labels, like look at the tape. What's the relative? Who's the leader? That's what I would get down to, because I find it very frustrating, these narratives. And it's why I've stepped off X quite a bit. I mean, I still post from time to time, but compared to what it was before, because it's just these narratives that take hold to me that don't make a lot of sense.
Preaching to the choir on that one. I mean, it's pretty simple. Like, hey, the market's going down and this stock is not going down. Does that mean you should sell that stock because you're the only one that realizes that this one's not going down and it's going to go down eventually and catch up to the market? Is that what you believe? Or do you believe this is not going down even though the market's going down? This thing has inherent strength. This is what I want to be in. Which one of those do you want to believe in? That's your call. I will believe in the second one 100 times out of 100. Because that is what worked. You know, it's the market giving you a tell. You know, you're not going to outthink the market. Everybody knows that this stock is not going down, despite the fact that the market's going down. Right? You're not the only one seeing that. Right? So you have to go to what the market is telling you. That's no matter how you trade. That's what trading is. I say it all the time. What's a bubble? You know, my favorite, I think, definition for what's a bubble is the things that are going up that you're not long. That's what a bubble is.
I was joking with some friends the other day. No one ever calls something a bubble when they're long that bubble. They're just happy and they hope it extends like another
That's what
100%.
I'm
And so
saying.
I think that tells the positioning right
No, that's
there.
exactly what I'm saying. The people that call it a bubble are the
Yeah.
ones that aren't long, that are watching it go up. So
Yeah.
it must be a bubble. It's going straight up. I'm not long. It must be a bubble because I'm so smart. Wrong.
Yeah. Well, looking at the market, we're starting to have an interesting change. So last week we were talking about this reversal bar on the Qs was important because that was like the Nvidia gap up, slam down, and that was going to be where the strength would come back if we could take that out. We noticed there was capitulation possibly at the bottom, but this would really show a change of character. Interesting, as we're talking here midday, I find today's really a different animal the recent past because we gapped lower, which would be fearful for most, but we found support really at those highs. So the buyers didn't fade. And what's interesting is crypto has been tremendously weak. So, I mean, this gap down, this is almost taking out its lows. So whereas maybe November was a bit of like a growth scare or AI bubble narrative running, but maybe it was just, some credit woes. In fact, Bitcoin's weaker than others, but the Qs still look very strong. And as we start to turn the corner and we look at, I saw Hassett is one of the top picks for Fed chairman. He's a supply side economist. So he's all about lower interest rates, deregulation. QT is ending. So the Fed's no longer going to be shrinking its balance sheet. We still have AI CapEx spend. Like that's a wall of liquidity coming our way for 26. So the market's acting better. I see a wall of liquidity. What are your thoughts,
I
Jason?
think that that's everything. I think that that's it. I think that's everything. I don't think that the market is going to have a sustainable move down until it fails on liquidity stuff, because the liquidity is coming. That there's no, it's almost like the worse things get, the better it is, because it just means more liquidity has to come, right? So the question is, does the market go down and force them to juice liquidity, or does it just never go down because it knows that if it does go down, they're going to juice the liquidity and it's going to go right back up? Right now, we seem to be in the area where it doesn't really seem like it's going to go down at all. But who knows? But I feel like even looking at this Bitcoin thing today, which is sort of dominating the whole narrative today, clearly we had some stuff come out in the last 24 hours where they even the MSTR people started to hint at the fact that for the first time, maybe they actually might have to sell some Bitcoin at some point under certain circumstances. And that's got people a little bit freaked out. It's I find it to be an incredibly fascinating thing, this whole MSTR thing. Is it a Ponzi scheme? Is it not a Ponzi scheme? You go and you do the math and you say, okay, they have these convertible bonds outstanding, and principal has to be paid back. It doesn't have to be paid back if Bitcoin keeps going up, because then the people that own them can convert them into MSTR shares. But if it goes down, they have to pay back that principal. And where are they going to get the money to pay back that principal? Well, they either are going to raise more money to pay that back, which is why people start calling it a Ponzi scheme, because that's what a Ponzi scheme is, or take in more money to pay back the old money, right? Or they would have to sell Bitcoin. But then the people that are saying that's a bunch of crap are saying, if you look at it, it's like, some small percentage of their holdings that would be affected, right? The amount of
Mhm.
whatever they've got, I don't know the exact numbers, but $60 billion in Bitcoin, and they got, $8 billion that has to get paid back or something, right? So it's a small percentage. Well, it's a small percentage when Bitcoin is at 85,000, right? But is it a small percentage of Bitcoin? Is it 45,000? Is it a small percentage of Bitcoin? Is it 15,000? It gets worse and worse as it goes down. I don't know that it's going there. I wouldn't think it was going there, but the markets have a way sometimes. I've seen this a number of times of testing all these
Mhm.
things, right? And I kind of think that's what's going on. Everybody wants to know, what are they going to do if Bitcoin goes below their average cost? Well, the market kind of wants to find out. Sometimes. So that might be what's going on here, right? I don't know a lot about it, but I do believe that Michael Saylor, is that his name?
Yeah.
Has not reinvented math, you know?
It reminds me of the WeWork guy where, he thought he was going to become the world's most valuable company, just taking real estate, cutting it up, you
Right,
know, making signing long-term leases, but then after, you know, uh, selling off short-term leases. So they kind of did the inverse of
right.
what's usually safe in terms of capital, and then he got caught and the whole thing blew up. So it's again, the people think they rethink math and finance, but those rules tend to come
I
back
mean,
and
I'm
get you.
just saying, if you break it down and be nice and simple about it, if you buy an asset and you borrow money to buy that asset, and that asset price goes down, and if it goes down below what you borrowed and you have no other cash flow, then you're what is known as bankrupt.
Hmm.
If I borrow $10 million dollars and buy a $10 million house and I don't have any other income, if that price of the house keeps going up, I can go and take more loans and pay off the old ones, yeah. But if the price starts to go down and I can't do that anymore and I can't raise money from somewhere else and I have no other cash flow, then I'm bankrupt. I don't
But
see how that math has changed. You know, so
well, I think what works against Sailor though is before all these ETFs came out, like the IBIT or the ones where they're actually just holding the coins, the whole treasury model made sense because it was, if you really wanted to be in crypto, it was weird before. You had to wire money to an exchange, and it's like you had to go to it was odd. That's what kept me from early days investing. I didn't like the idea of sending my money to some exchange and having to hold a code or I lose all my money type of
right,
thing. But the ETFs solve that, and they've had massive
right.
inflows. So why, if I want from my brokerage account to get crypto exposure, why would I go into a levered bet when I could just go into BlackRock Bitcoin ETF,
Well,
which holds the asset?
I was reading today that I think MSTR is now trading below net asset value, and I think it's
Hmm.
trading almost to the penny below net asset value by the amount of loans they have against it.
Hmm.
So that makes perfect sense. You know, it's trading at like $8 billion below their NAV, and maybe $8 billion of outstanding loans against it. So that's interesting because at one point I think it was trading at 3 or 4 times NAV, and
Yeah, yeah, it was wild, way above
people were
NAV.
justifying it as it made sense. You talk about crash. This thing's down over 65% MSTR from its highs. Is that a crash? I don't know. I don't know what the definition of crash is. But if you're long, it probably feels like one. And look, this thing will be fine as long as Bitcoin goes up. That's really all there is to it. If Bitcoin
Hmm.
goes up, this thing will be fine. If Bitcoin goes down, then this thing probably won't be fine. So there you have it. What I think would be, I'll use the word funny with all due respect to the people who might be out there who would lose a lot of money if this happened. So I don't think it would be funny for
Hmm.
them. By funny, I mean ironic. If this whole Bitcoin issue ended up being the cause of a liquidity crisis out there, when it was meant to be the solve for
Hmm.
liquidity crisis, right? I think that would be very, very ironic. And is it big enough to cause something? Well, as the Bitcoiners have been telling me, this is like the eighth or ninth largest asset on the planet. I think that's probably big enough to cause a problem. If there was a huge problem in Bitcoin here, if the market pushed it down to where MSTR had to make a decision and suddenly that decision was bad and they started selling and there wasn't the liquidity of buyers because no one wants to buy it from them and the thing cratered upon itself for whatever reason, that could cause a little bit of a liquidity issue out there. But then again, so then what? Oh, then the government's going to step in and they're going to fill the liquidity hole, just like they always do, right?
Yeah, but those are two outcomes because like I'm just from what you're describing, I'm thinking of long-term capital management, 98, where they put on these big spreads that was natural gas, I think, with or Russian, I forget what they had. I think it was natural gas, where they got blown out, and eventually the Fed had to come in, save the day. Markets did well. They screamed to the dot-com peak. Again, the relative strength, the better stocks did well, but LTCM, they were done. They were washed up. So if you're on the wrong side of that trade, even if the Fed comes to the rescue after, you need to be in a place of safety or else you don't necessarily get rescued yourself. So something to think about.
No, that's right. I'm not saying I would necessarily buy MSTR if that situation happened, but the markets would come off on some kind of fear, like you said, with LTCM, and then they come in and they would come in and save the system again, and the thing to be buying would be the things that were kind of doing okay during that, just like we just talked about. So is that a likely scenario? I don't know that it's likely, but is it possible? I think that if you don't know that anything is possible, then you're not being honest about this game, because anything is possible. Markets have a
Just
funny way of finding the most pain.
for perspective, on the screen up here, this is the NASDAQ in 98 when LTCM was washed out. Look at the liquidity that the Fed pumped in to help LTCM. But then as a result, the most powerful stocks, which was the internet trade at the time, look at the relentless buying that went on in that group from that wall of liquidity that kind of came its way. So interesting to see those same dynamics take place all the way back 98 into 99. But that brings up a good question. You're talking about how the markets are responding to liquidity, so it's nothing new. But I'm curious, does this market specifically remind you of any of the other years that you traded? The way just between the fundamental drivers, whether you want to speak to having an AI theme or something else. But is there anything like you say, like, man, this really reminds me of trading this year earlier in my career or whatnot?
I don't really think I've ever seen the combination of what we have now, meaning this. I've been in plenty of markets where something new and huge was going on and the market was in bull mode because of it. I can specifically remember the early 90s in Hong Kong when China went from being essentially a closed country that hadn't been a part of the world economy for 70 years, and then they decided that they were going to open up, right? Billion 3 people were going to join the world economy, which was obviously very bullish. And you had the Hong Kong market take off, obviously, because the Hong Kong companies had the most access to the Chinese market. And then you had bubble type of stuff going on because you had, like, there was no stock market in China then. So you had these Chinese companies were coming into Hong Kong and buying what were called at the time shell companies. So it was like these companies that were listed on the stock market, but over the years had really become nothing. So the stock had just been sitting there at like 3 cents for the last 5 years, and maybe they owned like one building or something, and that was the whole company. And so all of a sudden, the Chinese National Oil Company would come in and say, we are just going to buy all of the shares in that company, and we are at least controlling shares, and then we are going to inject our assets into that, and then we are going to be listed on the Hong Kong Stock Exchange. So like these stocks would go from 2 pennies to $100 in a week, right? And then of course, once that went on, then everybody started buying all of those companies that were worth 2 cents, just speculating on the fact that one of these Chinese companies was going to come in and do that. And then of course, when they didn't, the stocks went right back down to zero, right? So that was sort of the bubble side of it. It reminds me a little bit of that because it's the whole new thing that's going to change the world. And that did change the world. China coming into the world stage certainly changed the world. AI certainly looks like, at least from my limited knowledge, like it's going to change the world. But what we didn't have then was this constant put, this constant Fed put, or what I would call the Trump put, right? Where
Well, there was the Greenspan put. I mean, to some extent in the 90s, there was quite a bit of support, I'd say, from Greenspan.
I don't really think it's like this one though. You know what I don't know. You might be right. You might be right. But to me, this is, I don't think I've seen, with markets on highs, with the economy doing well, and all these guys are talking about is they want to continue to cut rates, and pump and pump and pump and grow their way out of the deficit. That's their plan. So the combination of these two things together at the same time, the theoretical biggest story, technology story in history, mixed with the fact that we have an administration that is addicted. And it's not just our administration, it's Japan, it's China, it's Europe, it's everywhere, that is addicted to creating liquidity as the way out of every single problem that you could ever have. That combination going on at the same time, I don't know that I've seen that before. So that's why I
But
think it's very hard for the markets to have a sustained move down. But until that fails, that's what I keep saying day after day, until that idea fails. I am on the consistent lookout for that exact idea. We get some news that they're pumping more liquidity and the market can no longer go up on that. There is another side to it, obviously, just like there's two sides to every economic story, right? The other side to it is you can pump too much, right? And the markets will let us know when they feel that that's the case. I haven't seen that case yet. The markets went down earlier, last month when the chances of a rate cut were going down. Well, the stock markets went down. As soon as the chance of rate cuts went back up, the markets went back up. So it's still acting positively to that liquidity story. And as long as that's going on, I don't think the bull market is in trouble. But once it stops doing that, that's when I think that there's the potential for trouble.
one time I got in trouble with that line of thinking, not that line, but just in general, is I remember after the financial crisis was QE, we had a big rally off the bottom, and I was at that time making markets primarily with gold stocks. So like the whole concept that runs the gold theme is that runs Bitcoin, which is they print too much money, so gold will never go down. It's going up to whatever amount, et cetera, et cetera.
Right.
But the problem is always a negative back end view to that. So I remember at one point, I don't want to name names, but there was someone who was always negative, and they had called like the '08 top, and they always call some kind of thing. And so I remember being long gold and kind of really drinking the Kool-Aid of like, oh yeah, this is getting badly. Well, guess what? Fast forward, it's 15 years later and we're tremendously higher. So I think just knowing that, maybe this set of actions can lead to a bad outcome, or even if it will lead to a bad outcome, if that outcome is 4 years away, do you want to like ignore all of the opportunity between now and then? You know what I mean? Like it's just not for you. I'm just saying something that the logical course of action is people are going to hear like, oh, this could blow up. And that's true. Too much money printing it, that's going to have repercussions. The US dollar could lose reserve currency status, et cetera. And this can happen. And, but at what point, Caesar took over Rome in 60 AD and the empire collapsed a few hundred years later.
Exactly. No, it's all blah, blah, blah. There's no question about it. It's all blah, blah, blah. And that's why until the market agrees with you, you don't do that. I'm not going to short the market because I think that this could have a bad outcome, right? I'm aware that it could have a bad outcome. And when the market tells me that's how it's reacting, then I would look to make the trade. But I'm not going to just do it because it could have a bad outcome. It could have a bad outcome in 100 years from now. What good is shorting the market going to do? I mean, look, if you're shorting the market now, you're fighting the Fed, right? Which is a no-no. There's a reason why people say don't fight the Fed, right? And you're fighting City Hall, which is a no-no. There's a reason why people say don't fight City Hall, right? And you're fighting the tape, which is a no-no. So what are you doing? It will, and it could be the high right here, but if it is, it will give you a sign. I promise you. The tape will let you know. It will stop acting well on the back of this liquidity stuff. It stopped acting well on the AI stuff a couple weeks ago, right? Palantir failed, NVIDIA it failed, but it's right back. We're within, I don't know, a couple percent of highs on these indices now, right? The S&P, the NASDAQ, the Russell, we're within a couple percent. So let's not get carried away here, And as I keep saying, if it is going to blow up for whatever reason, pick your bearish narrative, they're printing too much money, it's Rome, it's going to burn, blah, blah, whatever narrative you want. If it is going to blow up, then you got plenty of time to get short. Okay? If this market's going down 80, 90%, then you don't have to be short today. You know? You could wait until it goes back through the lows of last week. And what are you missing? If we're going down 80% from here, you'll miss the first 2-3%. Okay.
Yeah.
So what? So this is always a theme that I'm going to talk about. And it's a theme that people get sick of me hearing, but I can't pound it into people's head enough. Let the market agree with you. I don't care if you're bullish, you're bearish. I don't care what you think. Think whatever you want. And trade that once the market agrees with you. You can't fight the tape. And like I say, right now you're doing more than fighting the tape. You're fighting the Fed, you're fighting City Hall, and you're fighting the tape. So at least let the tape go your way, right?
Well, there's I don't know if you ever read the book. Let me just bring up my screen here. This is a book that kind of like really hammered it in. Like I always kind of had a good idea of all this stuff. I read the book by Marty Zweig, Winning on Wall Street. What I really liked about that book, it's outdated now, but he had built this Fed model. And he was just showing how whenever the Fed was cutting rates, how well the market did versus when they weren't, et cetera. It's outdated because the Fed has gone into new tools. This is written from, I think, the 80s. So now there's QE and all this kind of other stuff that will impact liquidity.
Right.
But I remember reading that book and he just, he had technicals to time things. He had like this 4-week high-low rule, like what you're saying. He waited for it to kind of confirm or whatnot. But he just showed like the main trend, like the bull market, the tide that lifts or lowers all boats is that liquidity and it's the Fed. And this goes back to the 80s and Zweig was talking about it. And it's the same thing. You just have to learn how to read that part of the market and focus on the right stock. So I don't know if anyone ever wants, like I said, it's a bit outdated, but the core principles are true. But I'm curious if you ever read this book, Jason.
Years ago, I definitely did. It's a good book. Marty Zweig knew what he was talking about.
Yeah. Okay, very cool. So in terms of liquidity drivers, just the kind of things to keep an eye on. So I'll just have my list here of 2026, what should be coming our way, so we can see if whether or not it helps or not. But we're expecting new Fed chair, which is almost certainly 100% certainly going to be a dove and going to be wanting to cut rates because that's what Trump wants. We have AI CapEx seems to be expanding, end of QT. We have, I think, record corporate buybacks expected over $1 trillion. So, again, we don't want to just have a preconceived bullish bias, but it would definitely have to see some real negative technical action to show that this is in serious trouble with the amount of flow.
Creating money. China, the numbers in China are coming out weak again. So they are going to print and create liquidity because they have a lot of people that they have to take care of. Obviously, they can't afford. Nobody can afford a recession anymore, right? This has become the thing since 2008, right? Nobody can afford a recession. So if you can't afford a recession and you own the printing press, it's pretty simple, right? I know what I would do.
Yeah.
I can't afford for my income to go down. So if I owned a printing press, then I would just print money. And it's the same thing. These people cannot afford recessions. They just, in one form or another, print money, create liquidity, and avoid it. It's all...
Well, that's the gold trade that I have up right now. I'm curious. I know the COT data, for those who aren't familiar, Jason followed the commitment of traders data, which is reports the positioning of commercials, large speculators, and retail. It's been stopped for a while because of the government shutdown. But I know you have some proxies that you use, Jason, and whatnot. Is there anything that you're seeing with? I mean, gold's been persistently strong. Is there anything with the COT data that would suggest that?
The last COT data we had, officially, they're releasing them slowly, but it was like the 14th of October. And as of then, a lot of the gold, and in particular the silver longs, had sold out. A lot of people thought that was sort of the bubble top there, right there. And we saw a lot of people had sold out during that period. So they were no longer really long. So there you go. A lot of people laughed, even though you don't think I have a sense of humor and I'm cranky all the time. I said on one of my videos last week, when silver, 3 days ago, right, when silver was testing that new high, I mentioned that the COT, over there to the right, that one, on that day, the day before that one, on that day, I made the comment first that the COT, yes, had shown that we're selling out of silver, and B, we're right back on highs, and what I said was you can't triple top a double top, which was my reference to, Dumb and Dumber. I don't know if you've ever seen that movie.
Of
People
course.
got a good laugh out of that one. You can't triple top a double top. But look what happened. You did not triple top a double top. The thing broke out. So, and this all makes sense, right? If what we're
Mhm.
saying, all this stuff, the yada yada on the macro and then this and that, we don't know if we're right. We have theories, but you want things that the markets to be confirming that what you're saying maybe is right. If this whole thing is about liquidity and they're pumping liquidity and doing this, you would expect these things like gold and silver to be going higher. It's not a stretch to understand why that is, right?
Mhm.
And there it is, right? Look at silver. I mean, are you kidding me? So,
One thing I find interesting though is I find that liquidity will find its favorites. Like last cycle, Bitcoin screamed, gold didn't do much. And even when inflation came around, even when real rates fell, gold didn't do much. But it's like now gold is catching this massive bid. Even going to like the mid 2010s, when QT ended and they kind of reamped up liquidity in 2013, gold didn't do much. So is there anything that you track to see like what you think is like I guess relative to whoever's leading this cycle? Because I mean, this cycle is a perfect example. Liquidity is ample, gold, silver are ripping, but Bitcoin's getting hammered. So it's ironic in another sense
you
again, but
said it
that's
all in
market
the
risk.
very beginning. You said it all. Okay? So here it is. My theory is these guys are going to keep ramping liquidity. So I want to be long some assets that are going to benefit from a ramp in liquidity. Okay, what are those? Maybe gold, maybe silver, maybe Bitcoin. Okay, look at the charts. Silver can't
Hmm.
go down, right? It's the strongest one of all of them, right? Gold, okay, it's strong, but not as strong as silver. Bitcoin has been trading like shit the entire time. Do I want to buy the one that's trading like shit? Or do I want to buy the one that's showing strength? You already told us the answer. And then
Yeah.
there's just another example. It doesn't matter if it's a stock or a commodity or a currency, whatever it is. There's the answer. Which one of those do
What's
you which
amazing
one
is,
of those do you want to buy 2 weeks ago?
yeah,
You know?
yeah,
Like come on. You want to buy the strong. You're not going to play the catch-up game. It's one of the biggest mistakes people make. And the worst part about it is once in a while it works, but over time it does not work. Once in a while everything works, right? But we want to be doing things that work over time, and over time, trusting the market, buying the strong, not buying the weak. Well, the liquidity trade is working in gold and silver. It's just not working in Bitcoin, so I'm going to buy Bitcoin because it's going to work. Well, there's a reason behind why Bitcoin is underperforming this whole time. And we're just finding out that reason now. All of a sudden there's
hmm
this whole thing and they might have to sell some and the market is probably pushing them on that and testing them on that. Will they succeed? Will they not succeed? Who knows? And if they don't succeed and all these people that are trying to push it could get squeezed. Okay.
hmm
But if they're going to get squeezed, I promise you, Bitcoin will start to do well first, right? Before it does well, it has to start to do well, right? Same thing. It's the same thing as what we just said on the stock market. If you're super bearish and you think the world's going to end, okay, then miss the first 3-4%. What's the difference, right? Same thing on Bitcoin. If Bitcoin's going to $1 million, like the bullish Bitcoin people think, well, then buying it at 94,000 instead of 84,000 ain't going to make a bit of difference.
hmm
Let the thing show strength first, and I don't even think you'd have to wait till 94,000. And show strength, and we have plenty of bad news coming out on Bitcoin now, so we have a great way to monitor it. Let the thing not go down on some bad news, and I'm not talking about last week when it went up, because it went up because all the risk assets were going up. So that's not telling us
yeah.
anything. That's not the tape telling us anything. If anything, the tape was telling us it's still weak. All these other things were testing like close to highs last week. Bitcoin, not even close, right? Let it show some relative strength first, like you say, relative strength, relative strength. Let it show some relative strength first, and then you can play the Bitcoin catch-up thing. You can't just play it as it's cratering relative to these other things because you don't know when that's going to end. But the market will tell you. I know I say
I
that
think it's a
a
mindset.
today, but you have to pound that into your head. That is how this works.
No, I was gonna say, I think it's the mindset thing that I don't know about you, but growing up, it's you're taught as a kid you got to look for the specials, you look for the deals. If something you wait if you want to buy something, you wait until it goes on sale. That's when you buy it. So we're kind of trained, and I mean, there's reason behind that, obviously, but that logic of like treating a stock as like a product that you would buy to buy on special, I don't, and I see it pervasively. I think someone like a Warren Buffett, probably promoted that more, though he's much smarter than I think like the basic kind of truths that he likes to talk about. And he's shifted his strategy so much over time. But I don't feel that works in the market. It's really is that the market, you have a choice of what you're going to buy, and you want the one that's in most demand, not the one that you're trying to get at a discount. And I think it's so hard because I think for most people, it's a lifetime of thinking that way for everything else that has to do with buying things. And then you come to the market and suddenly it's like you're trying to explain to them you got to do it the opposite. And I think it's very hard for most people to
No,
accept.
I hate when people say that line. I really do. Buy what's on sale. Yeah, at the store maybe. But you know what? If you went to the grocery store and there were a bunch of peaches that were,
Rotten.
75% off, do you want to buy those? Because I bet you there's a reason why those
Yeah.
peaches are 75% off, right? Because they're rotten.
Mm-hmm.
You know? Do you want to buy the rotten peaches, or do you want to buy the full-priced good peaches, right? I would equate it to that. I just made that up on the
Mm-hmm.
back of my head, but off the top of my head. But I would look at it like that. A shirt or something like that. Okay, here's a shirt that I've always wanted. It was $100. They lowered it to $30 on sale. Okay, I'll go buy it now, right? Of course, it's probably out of style by now. But me, obviously not being a slave to style, that's not going to matter. But there's reasons. There's reasons. Most of the time, there are reasons, and I would look at it more that way. Why is this stock so cheap relative to something that it's similar to? And I think you'll
Mm-hmm.
find over time there's a reason. Snap is super cheap, right? And I know people
Mm-hmm.
that have been bearish the market for a while, and Snap is the stock they keep buying because it looks so cheap. How you done on that one? Stock hasn't gone anywhere for 3 years while we're in the biggest bull market, tech bull market that the world has possibly ever seen. This is the one that you want to spend the last 2-3 years buying because it's cheap
Yeah.
relative to everything else. I'm sorry, it doesn't work. Like you say, if you're Warren Buffett and you're a value investor and you can buy something where the intrinsic value is 10 and you can buy it for 6 and it goes down more, you can buy more if you're doing value investing. But that game doesn't really work very well. Hasn't worked very well for a long time now. And it's because I think everybody's onto it. In the 80s, Warren Buffett started writing books. And one of the first books I ever read when I was in college was the first book that Warren Buffett came out with. And then, of course, that led me to The Intelligent Investor and the Ben Graham and all that. But I wasn't the only one. Everybody did that, right?
Mm-hmm.
And now, I mean, shit. I could get on the computer and within 5 minutes, I could say, I could find the 20 stocks that are trading at the biggest discount to NAV. It doesn't take very much work to figure that out anymore, right? So therefore, the edge is probably gone.
Well, I was just going to say, you pointed it out, early days, and it's not obviously Buffett. I mean, who else has pulled off what Buffett's done? But the point, I think, is the market's changed from like the original lessons he gave. Like he was buying companies where he could buy them for less than the cash on the books. Like it was an ARB. It was like, I mean, all ARBs don't exist out there. I mean, there's ARBs and everything. HFT was a time ARB and all this kind of stuff. But I just think it put in the wrong, and people kind of look at him as a value guy, and I think they misconstrue that as a low price thing. Like if the price is down, it's value. But the companies are changing. It's not like a fixed good, with a fixed utility or fixed value. So like just looking at the price, saying, oh, the price fell, like Snap and is down, that doesn't make it a good value. I mean, like that peach example, it's the same peach, but 2 weeks ago it was fresh and now it's rotten. So like the price is down, but is it a better value than it was 2 weeks ago? Probably not.
That's
So
what I'm.
by the way, if anyone's enjoying this podcast, like, subscribe. The more subscribers we get, the more smiling and joking Jason promises to do. So just a little reminder, as Jason and I are the worst marketers in the world, so we'll have to have my notes here to remind myself to let people to sign up to the podcast and like, subscribe if they like. But
People
Jason,
should know we're here. We're here to pass along what we know. Do we know
yeah,
everything? No. I think I know a lot about what I know about, which is somewhat limited. Although I think the lessons that I do from my trading can be applied to all different kinds of trading. Matt knows a lot about things that I don't know a lot about. I'm not a stock person. He is. I'm not a technical person. He is. Right. So hopefully people think that this offers value. And I would say, as putting on my marketing hat, since I'm such a good marketer, let us know, what you think. Let us know what you'd like us to talk about. We could talk about that. I trade mostly futures, but it becomes very macro because stock market. I trade stock market futures, bond market futures, currency market futures, energy futures, all of it. So it becomes very macro, and I can talk about what I'm seeing out there. Matt is more of an individual stock trader, which is probably what most people are too. But you can mix those two things. Hey, Jason's seeing stuff that indicates maybe the stock market's going to go higher. Okay, well, I want to get long. Well, what should I get long? Well, Matt is a stock guy that understands how to read the tape in stocks, as he has shown. Well, maybe that's a good idea. That's how I think this can help people, hopefully.
I agree. Speaking of going into next week, I know we spoke on the weekend. You didn't see anything very set up at the moment, but what are you focusing on? We spoke a lot about stocks, and in this we spoke about coffee. Are there any markets specifically that you're talking about, that you're looking at, Jason?
Nothing that anyone's going to be that interested in. Cotton is really my big setup here to get long cotton. And we have next week, not this week, but next week, we have a big WASD report, which is the big agricultural report that comes out every month. So I'm hoping that we get some kind of bearish cotton WASD report, and cotton fights that off and goes up. And I'll probably be getting long cotton here. And you can, if you like, back into that. What does it mean if cotton is going to go up? That obviously indicates probably some economic strength to come or whatever. You can do that if you want, but cotton is probably something most people are not interested in. Although you probably could find equities that are correlated to cotton. There might even be an ETF that's cotton. I don't even know. I'm a futures trader, but we find that there's a lot of ETFs for these things nowadays, since there's an ETF for everything. But my main thing for the financial stuff, which is what most people are interested in, stocks, bonds, currencies, metals, like I say, is monitoring how markets are reacting. News about liquidity. I think that's, to me, that's the whole macro game here, right? I am not a predictor of the future. I'm a reactor, I'm reacting to how the market reacts. I'm letting the market tell me. I'm not telling the market. So that's what I'm watching very, very closely, how the market is reacting to this new liquidity news. I don't think liquidity is a new thing anymore. People know about it. People know about the Fed. People know that there's a new Fed person coming in. People know that he's going to be, supportive. So how is the market going to react to it? At what point is all that news in the market? That's what I'm looking for. That's my main game here.
Okay, interesting. We'll keep an eye on markets like we spoke about. Cotton's definitely one to watch. A little harder to trade for equity guys, but interesting to watch as well. I'm going to take a look, see if I can find an ETF that I could bring up next week. I didn't see anything, but maybe there's an ETN or something. Something I want to talk about. I know we spoke so much about AI, and that's my biggest focus, but trying to find some other setups outside of the space that are sometimes adjacent or whatnot. So we spoke about CRS a couple of weeks ago when the market was melting down, and this hasn't done much. But what's interesting about CRS, so they're like specialty metals. If you look at the rest of the group, first of all, let's put a weekly chart on just for a bigger viewpoint. Let me put a log chart. This has come to chart. For those who remember, like I remember this stock because this was when I first started trading, like in 2003. This is one of like the real monster runners was CRS and that whole group. But that group seems to be coming to life again. So CRS has remained strong throughout this correction. But if you take a look around, you look at Steel Dynamics, STLD, this is already back up to highs. Again, this similar group. This was also incredibly strong in that 03 to 07 period. We spoke about ATI, or rather, I want to mention ATI, also within the group, specialty alloys sitting near highs. This is an interesting example. This never passed this 2007 high. But there's something going on with that group. Applied Materials also in that group, back at highs before the market, new highs. But they're coming to life now. They haven't led through most of the year. And I love to see when there's a market correction for a month, 2 months, who's the first to lead out of that market correction. And the STLD, AMAT, CRS, they seem to be leading. Their drivers are a lot of his aerospace, especially alloys. Speaking of Buffett, he bought one of the competitors years and years ago. I think it was Titanium Metals. Or no, it was someone else. I forget the name of the company, but he bought one of the competitors. But also, they also service the semiconductor space as these chips get more and more specific and specialized. They need specialty metals to get the most out of them. Same in the data centers. So interesting to see them come to life. And, reading that tape during that market drop, look at how these barely budged. I mean, this is an earnings move, but if you look at a line chart, this barely did nothing as the market fell apart and first to new highs. So going into next week, an interesting group to keep an eye on.
Why don't you give me this one? Because this is a stock that I bought a couple months ago. Just it was one of those like, my friend told me, so I just bought it. Right? LAW.
CS Disco.
What do you think of that chart?
Well, so interesting. I mean, your friend did, if you bought it back in August, he did you a solid, but
I bought it like around $5 or something.
yeah. So I think one of the things that stand out.
So they are like, they're an AI company. They're supposed to be doing the law firms. They're supposed to be replacing law firms with AI, right? So if you need a document,
Right.
instead of going and paying a lawyer, $3,000 or $5,000 for your will, these guys can draw you up a will for like $30 or whatever, or something like that. I believe that's what they do. It is a friend of mine he's actually a derivatives broker to hedge funds, but his firm does a lot of smaller company stuff, and this was one that his analysts apparently loved. I just like it because anything that puts lawyers out of business is good for me. So I bought some, and obviously it was acting well, right? So I kind of liked it. So I don't know. I think that chart looks pretty good. What do you think?
I think the turn was here because this had been a laggard for the longest time. And this is really where we got like the momentum push. But the real standout is because, after an earnings report, any company could have a good run. The real test always comes during the market correction. Like this withheld great. I mean, first back to highs. You can. I love to look at every kind of market reaction and rally. So like on the market dip, this pulled back as the market made a small rally. This was able to rally all the way back to highs. As the market moved lower, this didn't break its prior low. And now before market gets to highs, this is back at new highs today. So to me, this is A plus type of tape here on LAW.
So I got the thumbs up from you on LAW.
There you go.
Like I say,
we'll do like a friend of mine.
Because I hope they put all lawyers out of business. So
when I started trading, I wasn't on the floor. They just closed the floor where we are. But my buddy says, man, if you think I used to complain about the cut a little bit that the firm would take. And he says, man, when I was on the floor the old days, he was the oldest guy on the desk. Like, my manager would come around and he would look at my buy and sell cards and he would like selectively take the ones that he wanted that were good that day. And you couldn't say anything because he was the boss. And that's just the way it was back then. Hey, you're happy you had the job. So point being, if you want to give me that $5 purchase, I'll take it, Jason, but I can't force it on you. Okay. Well, everyone, thanks so much for tuning in again. Another great week. And if you like the episode, subscribe. The more the channel grows, we want to get great guests. We want to get company CEOs. We want to get other great traders on, and it always helps as the channel grows. So Jason, thanks so much. Thanks for a couple of smiles and a laugh too. We're already a step forward and we'll be back next week.
All righty. Thanks. Good talking to you. And we'll see what we can come up with next week.
All right. Thanks again, Jason. Talk soon.